Markets look set for a bounce back going into the end of the year. So here are some of the stocks that I'm going into, both for the short term and the long term. The first is OMDC, and this company has a very filmy story. See, rumor has it that the company had some issues with the chief minister of Orissa from the past 8 years, and because of that, they had lost access to mining operations in some of their mines. Now, this had not even gone to court over the last 8 years, so the company was essentially sitting on assets without using them to generate any income. Now, what's happened since the elections in June is the BJP government has come in, and now the company has gotten its rights back, or at least there's litigation moving towards that. If that is to happen, if this company starts mining again, the stock price should be 4 times what it is right now. And that's why this can make for a high risk, high reward strategy, but in any case, makes for a good stock to study. Second is Max India, and this company specializes in a very underserved sector. According to Deloitte, India would have about 30 crore people over the age of 60 by 2050, and India is desperately short of senior care businesses. And with a market cap of only 1100 crores, Max India seems to be a stock that really does not have a downside. If we look at its profit and loss though, we have some bad news there. The company has not yet been very profitable. But that's mainly because this business is still in its nascent stage, and I do expect that as time passes, we will have higher profitability. You do know that I don't invest in companies that are not profitable, but the reason this company does pass that check is because its cash flow is still positive. Combine that with the fact that their balance sheet shows very little debt. They have about 400 crores in reserves and less than 200 crores in all liabilities combined, which means company's safe here even if it's not making a profit right now, and it has the management of Max, which means long-term view bhi hoga is company ka. We couple all that together and high risk play banta hai, but it's still a company that's something I would want to keep in my portfolio. Next, we have Gland Pharma, and this is a direct beneficiary of the Biosecure Act in the US. See, what this act does is it bans importing pharmaceutical ingredients from countries that the US is not very friendly with. In our case, that would be China. Now, if we study the fundamentals of Gland Pharma, we can see that the company has historically been profitable. Now, the profit hasn't grown much over the last 2 years, but that is more down to the US business slowing down than anything else. So as the US business picks up again, we should expect that this profit would grow much faster. If you also look at the balance sheet, we can see that the reserves far outweigh the liabilities combined, which is very good for the company, meaning even in depressions, the company wouldn't go broke. At the same time, if you look at the investors, we can see that the DIIs have increased their ownership a lot. The promoters have sold some stake, so have the FIIs, but the DIIs have picked up much more than that. So taking all that into account, this company seems like a very safe bet. If we also look at the chart of this company, we can see that the stock has corrected by more than 60% from 4,300 at the top, now down to nearly 1,600. So if a company or a stock as good as this gives you this big a discount, it almost becomes a no-brainer to buy into that company, even if it's going to be a buy on dips. Fourth is Ether Industries, and this is one of my favorites in the entire chemical space. They have an excellent management, they dominate certain chemicals, and are also going into electrolyte additives. See, electrolyte additives are essential for lithium-ion batteries, so the demand for that particular branch is going nowhere. This company is also undergoing expansion, but using their own capital instead of raising external debt. What that does is, first, it makes sure that the interest costs of the company keep low, which in turn means that the company's profitability will not take a hit with expansion. And second, because it's internal capital, the risks of default become very low because the company doesn't really have any credit to default on. Coming to the fundamentals of Ether Industries, if you look at the profit and loss, the company has been profitable and their profit has grown by about 5-fold in the last 5 years, which is obviously an excellent cargo to grow at. If you look at their balance sheet as well, we can see that the reserves far outweigh the liabilities, which is something that I always look for in a company. That tells me the company is not going to go broke as long as it maintains a decent business model. If we look at the investors now, we can see that the DIIs are increasing their ownerships, so are the FIIs, and the promoter holding is still above 75%. That's a key point here. Until the promoters bring it down to 75%, the stock will probably remain under pressure because the promoters still have a large pool of stake to sell. So till that time, it might be a good time to accumulate. At the same time, starting now wouldn't be a bad idea. Another one of my favorites is EMS, and this is in the water treatment sector. This company is cheaper than most of its peers, and given that the water treatment industry is going to grow over the next couple of decades, in any portfolio, having EMS or ion exchange is almost a must have. Talking about EMS now, if we look at the profit and loss statement of the company, we can see that it has historically been profitable and is growing at a decent pace. Even in the balance sheet, we can see that the company's reserves far outweigh the liabilities, which will be a common theme in almost all the stocks that I talk about. So taking all this into account and the fact that it's in the water treatment sector, the stock should do pretty well. And we can see that even with the market collapsing as it has over the last 2 months or so, this stock hasn't really suffered too much. It's very close to its support at around 740, 750. So this might again be a good time to buy into this stock. All that said, I must reiterate that we are in recessionary times. So if I'm buying into any of these stocks, I am going to go into tranches with a buy on dip strategy.